Hero MotoCorp has delivered a PAT performance that I don't think the street will be utterly pleased with. 909 crore rupees, while we were working with estimates northwards of 1,000 crores. So that's about 1,007 crore rupees. In terms of the top line growth, well, that too has been a little bit disappointing. 8,809 crore rupees. We were working with a number higher than that of about 9,088 crores. So I think on those parameters, it's been a bit of a miss. Let's take a look at the operational performance. And EBITDA has come in lower than the ET Now poll, 1,376 crores versus 1,447 crore rupees. So clearly, it's been a bit of a disappointment when it comes to Hero Moto. The margins, though, have come pretty much in line with what the street was working with at 15.6% versus 15.9%. Remember, largely it's the volume growth number that the street was hinging on to aid the top line growth, and I don't think that has come in this time around. Remember, on a year-on-year basis, your margins have come in around 15.6%, but that's declined from 16.3%, largely on account of the increase in the commodity costs. The adverse impact of the expiration of the Haridwar plant tax benefits as well have hurt the margins. And Karanya, off late, it's been a terrible ride for the auto car, two-wheelers, and looks like Hero Moto hasn't really delivered.
Yes, Avan, it looks like it's not just because of the pricing war. The street probably also expected a weak set of numbers from Hero, and that's why the stock was under immense pressure, for all these days. Of course, the two-wheeler pricing war is an important aspect as well, but numbers have been a disappointment on all fronts. Margins is something that we were expecting. We were looking for a contraction in the margins because of the rising commodity prices. But apart from that, whether it's the revenue growth, whether it's the profits in fact have been completely flat. And do remember, this is the quarter where the company has clocked in the highest ever sales, crossing the 21 lakh mark. So clearly that has not translated into a very good top line growth or a very strong profit growth, and even like I said, margins are also have not only contracted but are a tad below the ET Now poll as well. The management has said clearly, and margins have been impacted because of commodity prices. They did try to offset the adverse impact of commodity costs by the means of price hike, by the means of cost management, but clearly that has not reflected probably as they had expected, because clearly there is a contraction and there will be some negative sentiment towards the stock once market opens tomorrow. Apart from that, they've also said that as far as the profit is concerned, that took a hit because the tax benefit that they were seeing from the Haridwar plant, that has also expired. So that was also not present in the quarter gone by. We have Nitesh Sharma joining us from Phillip Capital. Nitesh, hi. The numbers according to the ET Now poll have been below on all counts, whether it's margins, profits or the revenues. What are you making of it?
Yeah, certainly. So there was a small miss in terms of our as well as street expectations. EBITDA margin at 15.2% was below our expectation of 15.7%, and absolute EBITDA missed our estimates by 3%. I think prima facie, after looking at how Bajaj performed in this quarter, plus the commentary and aggression about gaining market share at the cost of margins, the stock has already taken a huge beating of almost 10% in the last 3-4 days. I think these numbers will provide a bit of comfort to the investors that margins and cost pressures weren't very high for Hero compared to what we saw with Bajaj. Just to remind you, Bajaj reported almost a 250 bips miss on margins.
Right, but Nitesh, what they have said is that they took a price hike in the quarter gone by, and they also did a lot of cost management in order to offset the impact of raw material on the margins front. But given this new scenario where pricing war is likely to get only more intense and worse for companies in terms of margins, won't the stock take a further hit, and won't investors turn more cautious towards two-wheeler names if this is what the margin performance is going to be like?
Yeah, I think stock has already taken a good enough beating post investors turning cautious due to aggressive commentary from Bajaj. After the Q1 numbers which Hero has posted, and it was just a marginal miss, mind you, only 3% on EBITDA front. it would provide some confidence that Hero, given its strong brand image, distribution strength, and a very healthy market share, Hero would be able to sail through the competitive pressures from the likes of Bajaj. If you remember in 2009-10 when Honda split up with Hero, even then investors became very cautious on the name, thinking that Honda would gain substantial market share at the cost of Hero. But despite the very heavy aggression from Honda, with very good models compared to what Bajaj offers currently to customers, and also a strong name which Honda is associated with. Despite that, Hero was able to maintain its market share overall. So I think today's numbers will provide confidence, some confidence to investors.
I would like to understand the fact that first Bajaj goes on board and says that they will enter this executive segment and the entry-level segment, and the price war that they did announce. The stock took a massive beating. We all have seen that. But what is making you say that after the beating that it took, on back of a commentary that came from Bajaj's management, that the weak numbers will actually provide comfort to the market?
See, after Bajaj reported almost a 250 bips miss on the margin front, Street was expecting a similar kind of performance in this quarter from Hero. So although there was a miss to our estimates, but it was much small, just a 50 bips miss on margins and 3% miss on EBITDA, which is not as meaningful as we saw in case of Bajaj. Bajaj posted almost a 18% miss on EBITDA. And hence, after the beating that we saw on the stock price, I think the investors would be reassured a bit that things won't be as bad as they were expecting a few days back.
That is, a sensible perspective. Nitesh, just be on hold with us. We are also being joined by Ashwin Patil from LKP. Ashwin, the numbers have not been as the market expected. They have been below on all counts. And mind you, this is a quarter where Hero has been able to clock their highest ever sales in terms of volumes. While they have said that, profits took a hit because of the absence of benefit from the Haridwar plant, what is the outlook going forward? Because profits have been flat, margins have contracted, top line growth has also been a tad below expectations. How are you reading into this? What do you expect from Hero in times to come?
See, now the comparison will always happen with what Bajaj has posted. And if you compare both the results, then definitely, on a standalone basis, I would say that Hero has come slightly below our expectations, but not as much as what Bajaj has done. Because Bajaj, with that initiative of concentrating on the low margin mass or the entry segment, they have, blown the bugle for price war in the coming quarters. But similar thing was expected from Hero because, the companies are definitely aware of what the competitors are doing. And with Bajaj taking price cuts in the lower segment, Hero also must have tempted to do the same, but they haven't done. In fact, they have taken a few price hikes to negate the raw material price hikes, and therefore the margins have not fallen to a great extent. They are just about 30 bips below our expectations. And though the net profits and all are flat because of the Haridwar benefits going out, and at the top line itself, the revenues are slightly subdued. But overall, on a relative basis, if you compare it with Bajaj Auto, then definitely Hero has put a satisfactory, not satisfactory I would say, but better performance than Bajaj. And therefore, see, the stock has already seen it has already taken a hit over the past few days since Bajaj has come out with numbers. So we can see some sort of recovery in the stock. It will be like the investors would be saying that, okay, Hero is still a better pick at this point in time as compared to Bajaj.
Basically, Ashwin, you're saying is that because Bajaj's numbers just came out a couple of days back and their fall in margins was much higher compared to Hero's dip in margins, is that why the street is likely to be a little more lenient towards Hero and take it as a positive thing as to the trajectory going forward and the pricing war situation that the street is factoring in?
Exactly, that's what I mean. That
Okay.
in this quarter, at least the numbers of Hero were not as disappointing as they were for Bajaj. But going forward, we know that the entire sector is going to face a sort of price war, and I think that is factored in the price of Hero's stock price of Hero, and therefore from these levels, I mean, we don't expect a great dip in the stock price for Hero. And let's see. I mean, the call is there at 6, so we'll take a call whether to maintain our buy rating or to downgrade it to hold, as we did with Bajaj Auto.
Much for joining in with your reactions in response to Hero Motors numbers to us on ET Now. Aman, with that, it's back to you in the studios, and looks like the recent correction and the fact that Bajaj's results were worse off compared to Hero, it's not going to hamper the stock too much in trade tomorrow, so we'll wait and watch.